मजबूत घर की असली पहचान उसकी अंदरूनी ताकत होती है। इसीलिए इस्तेमाल करें MSP TMT बार, जिसकी अत्याधुनिक रिप फॉर्मेट कंक्रीट को जोड़े रखे सालों साल। तो घर बनाएं सिर्फ MSP TMT बार से और घर को कहे जुग जुग जियो।
राधा 550 स्टीम TMT महाशक्तिशाली।
मजबूत घर की असली पहचान उसकी अंदरूनी ताकत होती है। इसीलिए इस्तेमाल करें MSP TMT बार, जिसकी अत्याधुनिक रिप फॉर्मेट कंक्रीट को जोड़े रखे सालों साल। तो घर बनाएं सिर्फ MSP TMT बार से और घर को कहे जुग जुग जियो।
राधा 550 स्टीम TMT महाशक्तिशाली।
मजबूत घर की असली पहचान उसकी अंदरूनी ताकत होती है। इसीलिए इस्तेमाल करें MSP TMT बार, जिसकी अत्याधुनिक रिप फॉर्मेट कंक्रीट को जोड़े रखे सालों साल। तो घर बनाएं सिर्फ MSP TMT बार से और घर को कहे जुग जुग जियो।
राधा 550 स्टीम TMT महाशक्तिशाली।
मजबूत घर की असली पहचान उसकी अंदरूनी ताकत होती है। इसीलिए इस्तेमाल करें MSP TMT बार, जिसकी अत्याधुनिक रिप फॉर्मेट कंक्रीट को जोड़े रखे सालों साल। तो घर बनाएं सिर्फ MSP TMT बार से और घर को कहे जुग जुग जियो।
राधा 550 स्टीम TMT महाशक्तिशाली।
मजबूत घर की असली पहचान उसकी अंदरूनी ताकत होती है। इसीलिए इस्तेमाल करें MSP TMT बार, जिसकी अत्याधुनिक रिप फॉर्मेट कंक्रीट को जोड़े रखे सालों साल। तो घर बनाएं सिर्फ MSP TMT बार से और घर को कहे जुग जुग जियो।
राधा 550 स्टीम TMT महाशक्तिशाली।
मजबूत घर की असली पहचान उसकी अंदरूनी ताकत होती है। इसीलिए इस्तेमाल करें एमएसपी टीएमटी बार, जिसकी अत्याधुनिक रिप फॉर्मेट कंक्रीट को जोड़े रखे सालों साल। तो घर बनाएं सिर्फ एमएसपी टीएमटी बार से और घर को कहे जुग जुग जियो।
राधा 550 स्टील टीएमटी महाशक्तिशाली।
Hello and welcome everyone. Thank you for joining us for today's webinar. My name is Monica Bachchan. I'm a founder of Metalogic Projects Management Services. It is a maximum women organization. Today on 3rd of December 2020, we are presenting you webinar on 2021 Outlook of Steel and Raw Material Industry, webinar sponsored by Radha TMT and MSP TMT Bars. This is our 21st webinar during COVID-19 pandemic. Just a short housekeeping before we get started. If you have any questions during the panel discussion, please type them into the question box in your GoToWebinar control panel. I will bring them up during the presentation and we will also have time for questions at the end. Always mention your company name and organization which you are representing and who would you like to address your question to. We are also having poll questions for the audience. Please remain active to participate in the polls all the time. Before we start, I would like to give a brief introduction about our session today. Giving on outlook for the coming weeks or months of quarters is often said to be a very calculated task with a lot of particulars calculation and plenty of study of economy and current affairs. Similar is the case with the Indian steel today in our webinar titled 2021 Outlook, Steel and Raw Materials, focused on pricing where all our eminent panelists have come prepared with their views for coming 2021. Over the last few months, we are witnessing a decent increase in steel demand amidst rising raw material prices both in global and domestic markets. Downstream consumer of steel like automobile, white goods, engineering, exporters are directly taking the hit. However, there is a big level of detailing which is required to understand the steel industry, keeping aside just the price increase of its end products. Starting from the investment planned and stuck in the pipeline, deferred payments, working capitals, raw material cost, etc., which the companies have to take care post the pandemic period. An interesting fact to be considered is the current level of steel prices post increase in India are nearly the same as witnessed in July 2018, while the iron ore prices in the same period have rise by above 120% and coking coal have gone down by roughly 50%. Imported scrap prices, however, have remained the same. So few questions definitely arise here in accounts, the current aspect. Few questions definitely arise here. Did the raw material prices drive steel or is it the demand or certain other factors? Hence, our webinar today will take in account the current aspect of pricing and domestic demand and also a good understanding of future demand and raw material availability and much more to provide an outlook into 2021. Our expert panelists are Mr. Arnab Hazra, Deputy Secretary General at Industrial Association, Mr. Sharad Mahendra, CEO, JSW Steel Coated Products, Mr. Praveen Shrivastava, Chief of Sales and Marketing Tubes Division at Tata Steel Limited, Mr. Bidyut Chakraborty, Director Mining and Metals at KPMG, Mr. Pukhraj Sethiya, Associate VP Mining Adani Enterprises Limited. And I'm your moderator, Monica. To begin with, I would like to start with Mr. Arnab Hazra to please open the session, and before that, a little introduction about him. Mr. Arnab Hazra, Deputy Secretary General, Indian Steel Association, is a professional economist and currently he's a Deputy Secretary General in ISA. Prior to joining ISA, he was a director in FICCI. He has been associated with the steel industry for over a decade. He has trained in St. Xavier College, Kolkata, and Jawaharlal Nehru University, New Delhi. Arnabji, I'd like to take your permission before we start. Can we do one poll, if you permit me? Okay.
Sure.
So, audience, I have a question for you all before we start on your screen. So the question is, who came first, chicken or egg? Similarly, did steel price drive raw material or the other way? Audience, please poll, please answer the question. This question is really important to have a general understanding. Who came first? क्या रॉ मटेरियल प्राइसेस स्टील को इम्पैक्ट करते हैं या स्टील प्राइसेस रॉ मटेरियल को इम्पैक्ट करता है? प्लीज आंसर. A lot of people are answering. Please be fast. All right. So we are closing the poll now to share the results. And the result says 30% feels that steel demand in domestic market driving both and 30% raw material demand in global market derives the price. 31% says raw material deriving steel, and then 10% says steel deriving raw material. So these are the answers we have. So I see this is a mixed view we have got from the audience. Arnab sir, now I request you to please unmute your mic and start the session.
Thank you, Monica. To kick off today's session, let me start with a brief on the economy. Now, the economy was not doing well even before COVID-19 pandemic hit us. So we must understand a little bit. In the March 2020 quarter, so the first 3 months of this current calendar year, the GDP growth was down to 3.1%. And had it not been for the good showing by agriculture, the good Rabi crops, and government expenditure, our GDP growth would have been down to 1.1%. So the small point that I'm trying to make is that the economy was actually doing badly, because anything less than 6% will not help us in any way. Now, let's understand a little bit about the GDP. Private consumption drives about 55% of our GDP. So ours is mainly a consumption-driven economy. We all know that during this COVID times, consumption has taken a big hit. And during the 69-day lockdown period, nothing was available. You couldn't buy also anything. Government consumption is about 12-13% of the GDP, and investment is around 30-32% of the GDP. Now, if one looks at the GDP figures, one can see that the private consumption was slowing down from the middle of 2018, and investment turned negative from the middle of 2019. So, put together, we were not in a very happy position or happy scenario before the lockdown started. But where are we right now? That is, I think, a more important question. We know the first quarter was really bad of this financial year. We went down by around 24%, and in the second quarter by 7.5%. So technically, we entered a recession. But if we look at some broad parameters of the economy, so let's take 3-4 parameters. Let's start with something called the Nomura India Business Resumption Index, NIBRI. Right now, it is at around 87%. In February, it was 100%. So which means that the business activity is still not back to the pre-COVID levels. Then let us look at, which most economists track is the Purchasing Managers Index, or the PMI. For manufacturing, it moved into positive territory in August. It remained in the positive territory in September and October. For services, it was in the expansion mode only in October. Then let's look at GST collection. It crossed what we collected in the same month last year only in September and also in October. Similarly, if you look at, say, petroleum products, and even if you take out ATF, and because the airlines industry we know is under restriction still, the petroleum products consumption moved into positive territory only in October. Electricity generation in September and October. So overall, what we see is that till around August, we were still in a contraction mode. And things have started recovering from September to and October. Both these months have been fairly good, and most of the parameters are showing positive results. So does this mean that we are out of the woods? The answer is still uncertain. Because it's only 2 months that we are seeing a recovery where we have moved into positive growth, but this can very well reflect the festive season demand as well as pent-up demand. So in other words, we need still some more data. The services sector is still not out of the woods. We know there are still restrictions on large gatherings. Certain sectors like the airlines, the hotels, they are still down in the dumps, and they're going to take at least a year to come out of it. So more or less, what we can say is that till at least 3 more months data is available, that is November, December, January, we can't really say whether the recovery was short-term due to pent-up demand or it is a start or beginning of a sustained recovery. Now, having said all this, this small brief about the economy, let us get into steel. Now, let us look at the overall steel demand in India. To just lay the background, our present capacity is to produce around 142 million tons annually. In the calendar year 2019, I made my calendar year because the topic of the seminar is 2021 outlook. So I've assumed it is calendar year. So in calendar year 2019, we produced about 111 million tons of crude steel, which is roughly a capacity utilization of 78%. Now, when we convert crude steel into finished steel, there is a yield loss of around 8-9%. And if we take that, then the total finished steel production comes to around 101 million tons. Now, what was the demand? The demand in 2019, as per JPC figures, was 102.6 million tons. So we more or less produced and consumed at the same level, at around the 100-odd mark. In 2020, by our calculations, demand is going to fall by at least around 20%. So we are going to end up at around 82 million tons for the calendar year 2020. Again, as per our calculations, in 2021, we will reach back to the levels of around 100 million tons. Which means that we will have a growth in steel demand in 2021 by roughly around 22%. Or, put it in another way, by the end of 2021, we will reach finished steel consumption or demand levels that we ended 2019 with. Meaning we just lost 2 years in between. Now, having said that, let us now look at how we look at steel demand and what is the breakdown of the steel demand. The construction sector, which is both real estate and infrastructure, that contributes roughly around 61% of our steel demand. So if we, in 2021, if you're looking at roughly 100 million tons, we can say around 61 million tons is going to be consumed by the construction sector. The capital goods sector, that is electrical machinery and mechanical machinery, they contribute around 10% of the steel demand. The automobile sector contributes around 9%. The railway sector, including wagons, wheels, everything, contributes around 7%. Consumer durables around 6%. And intermediary goods, which also is called packaging, they contribute the rest 7%. So that's the sectoral breakup, broad sectoral breakup of the steel demand in India. Now, what do we see in 2021? We see that the construction sector is going to grow by around 17% from what it was in 2020. The capital goods sector by around 30-35%, automobile sector around 30%, railways around 18%, consumer durables around 25%, and intermediary goods around 35%. This is our forecast. Now, there is a background to this forecast. So if we go into further details, we see that the construction sector, it went down by more than 50% in the first quarter. So we're going to benefit from a huge base effect. Even in the second quarter, it was in the negative territory. So in the first 6 months of the financial year, or from April to September, the construction sector was in negative territory. Now, construction again has various outliers. One is your real estate, which has started doing reasonably well. Rural housing is expected to do a little better than in 2021. If nothing else, by the sheer amount of people that have gone back would require some amount of construction in the rural areas, plus the government's thrust on affordable housing. We know that this sector also suffered from liquidity flows, liquidity crunch in 2019 and 2020. That has kind of been resolved by the government. There's enough liquidity into the system. The NBFCs have been capitalized, the banks have been capitalized. So right now, we can say that this sector is not going to face the headwinds that it faced in 2020 or in 2019. And we are hopeful that this sector will grow by around 17 to 20% in 2021. Having said that, there are certain cons. One of them is the infrastructure projects are largely driven by the government, and the government is cash strapped. If we look at the government expenditure in the last 3 months, it has not crossed what they spent in the last year. So, which means that the government is also holding back its expenditure. But it cannot continue for a long time, and we are pretty certain that all the infrastructure projects, which also have been pushed back by 6 to 9 months, will start happening in 2021, at least by the middle of 2021. So we are hopeful that construction sector will do well. The first quarter, the April to June quarter, will gain from a huge base effect. Thereafter, the construction activities will pick up, the highway activities will pick up, and we are hopeful of around 17 to 18% growth in the construction sector. So I roughly said that in 2021, we expect steel demand to be back at the level of 100 million tons. So we can expect that the infrastructure sector, which is largely driven by, which consumes mainly TMTs, will see significant growth in the year 2021. Then we move into capital goods. Capital goods, we expect electrical machinery as well as uh, mining machinery and construction machinery to pick up. The other part, mechanical machinery, might take a little bit longer time. But with the mines lease problem, the mining equipment sector was not doing well in 2020 plus the lockdown. So we are hopeful that the mining sector will gather pace and that sector will start growing, the machinery part of that. Similarly, as construction picks up, construction machinery will pick up pace. As real estate picks up, electrical machinery and other allied machinery sectors will start doing well. Then we come to automobiles. Now, the automobile is a very tricky part. It is tricky in the sense that it is in the midst of a cyclical downturn. So in 2019, the sector did badly. And in 2020, I'm going my calendar years, except the last 3 months, that is August, September, October, the growth was negative. So on the back of very low base, we still had negative growth. Now, this demand in the automobile sector is largely seen as a pent-up demand and festive season demand. In other words, beyond January, it is difficult for this sector to really pick up pace. That also holds true for the two-wheeler sectors. Two-wheeler sector, mind you, is more of a reflection of the rural economy, rural demand. Now, in the rural economy, the agricultural sector has been doing well. So the farmers have been doing well. So which means that tractors and agricultural machinery will do well. But the rural economy is not just farmers. There are also wage earners, and the real wage rate is in negative. So unless that recovers, the two-wheeler demand is not going to recover significantly. Nevertheless, we are optimistic as a whole for the sector. And the export sector is also considered to be, going to be a bright spot. The commercial vehicle segment is not going to do well, and that's going to take a major hit. It's already facing heavy headwinds. There is already overcapacity, excess fleet. There are problems with leasing, with finance. So except the commercial segment, commercial vehicle segment, which is going to do very badly, the others are going to do more or less okay. Given the low base, we expect around 30%, but we fear it might be a little less than that. Let me just jump to consumer durables. Consumer durables has also started doing really well in the last 3 months. And we expect that with more work from home, certain demand for certain things like washing machines and dishwashers and even ACs and other things, they're going to be demand even from tier 2, tier 3 cities. So we expect the consumer durable sector to do pretty well in 2021. Now, railways, we have taken a growth of 18%. I'm not very sure if they would have the money. They really need those projects. If those projects go on as planned, 18% will happen. But they have not been running the passenger trains to capacity, and so railways will face a crash problem unless the government overlooks the fiscal deficit and pumps in money into that sector. The growth might be a little wobbly, but we still expect 15% plus growth. Intermediate goods, the last part, depends more on the automobile sector as well as exports, drums, barrels, other things. And we also expect healthy growth on that front. So overall, we expect steel demand to recover by around 20-22% in 2021 and reach around the 100 million ton mark back in 2021. One last word about prices. Steel prices can be because of whether it is going up or down, can be because of two factors. One is the cost push, one is the demand pull. Basic thing in economics. Now, the demand pool has not really been there so far because we are down 20% this year. The flat segment has recovered better. because construction is still in the negative territory. So we are seeing more of a flat steel mill. There's a bit of demand pull, but it is mainly the cost push that is making steel prices rise, and it's not really reflective of demand and supply. Because when I say 20% down demand in 2020, and then I see the rising in prices, it doesn't really gel well. So that is the last thing I wanted to say. And before I end, Monica, over to you.
Thank you so much, Arnab sir, for giving the little perspective on sectorial demand. And now we are moving on to our next panelist. We have Mr. Sharad Mahendra, CEO of JSW Steel Coated Product. A little introduction about him. Before his previous assignment, Mr. Sharad was working as director and COO and was on the board of JSW Energy Limited as a director and also on the board of subsidiary and JV companies of JSW Energy. Mr. Mahendra has been recipient of Hall of Fame Award, London for Best Practice, Best Marketing and Communication, personal, globally, and his unique work on branding the steel sale channel as JSW Shoppe has been published in Harvard Business School and many Indian management institutes as a case study. Mr. Sharad Mahendra, I welcome you to our webinar. Over to you. Request you to please unmute your mic.
Yeah. Thank you, Monica, and good afternoon to all the panelists and all the members and the delegates who are present here. In fact, Arnabji has given a very good, nice overview of the economy, current and going forward, how it looks like, and also the steel outlook. So not much to state, but yes, I will just like to reiterate some of the things what is said, that because of this COVID impact which we have witnessed and continue to witness, there definitely is a demand contraction, economic contraction which we are seeing. But the way last few months, especially last 2 months, 3 months, in terms of the steel demand which is coming back, are a positive indicator going forward, especially the outlook for 21. We definitely see as the fundamentals, because as a country we see that the way, barring maybe some slowdown which we witnessed in 2019 related to the steel consumption and the demand, overall economic growth, the fundamentals continue to remain strong of the country as an economy, and there is no significant reason or apparent reason which is visible that there is going to be a challenge in terms of the economic growth, barring this temporary hindrance which has come up in the current year. And this last 2-3 months especially have given an indication that things have started coming back. And as rightly said, flat steel, because of the nature of the consumption, has shown earlier signs of revival as compared to longs, which has shown just maybe a few weeks or a month back or so, have started coming back. And we all know that longs is basically a product as such which is quite labor intensive as compared to the flat steel consumption and the usage. And because of the challenges being faced, that the workers and all, because of this pandemic, moved away, have started coming back. And a lot of government projects also, especially in most of the major countries, we are seeing that the metro projects which have been going on, nothing was happening, including the city where I am in Mumbai. But the things have come back. It is visible to the eyes. Everyone can see. And it started reflecting in the demand for the long products also. So going forward, definitely I see that 2021, though we will be ending with negative consumption. I'm not going into the details of the numbers which have already been shared by Arnabji, but definitely we see a positive growth in terms of the steel consumption in the year 2021. What it is, maybe estimates say that maybe 4 to 5% growth. But if that is the growth which is limited to, so we have to remember the growth year on year will be on a much lower base as compared to what the base was in 2019. So coming back to maybe the pre-COVID levels and then attaining growth, we see maybe year 22 onwards, maybe that is what we expect. But overall, the things look to be positive. And last 2-3 months estimate of the positive growth is that we also have been seeing certain demand, especially in the value-added products. And also, if I talk of the products which are more rural and semi-urban centric consumption, which is there in unorganized sector, the demand has started coming back as early as July. And it continues. So initially, it was being felt that channel inventories are being filled and it's a pent-up demand. But now with the trend, as maybe seeing in the current month also, previous month also, and now the trend which is visible in the current and going forward next 2-3 months, especially in quarter 4 of fiscal 20, we see fiscal 21, we see that overall demand, especially driven from the rural and semi-urban areas, has shown a significant positive, which is visible from not only our steel products, which are more rural and semi-urban dependent, but also the end product being made from these steel products also, which I think our panelist, Mr. Praveen, will definitely speak on, because we track certain consumer segment trends also. So with these factors, I expect 2021. I see the worst to be over for the industry, and going forward, quarter 4 and FY and calendar year 21, we definitely see that things are going to look up. Yes, coming back to the levels of our earlier peak and then sustaining a continuous growth of 6 to 8% in terms of steel consumption. Maybe I see a 2 to 3 years gap coming back to that level. With this construction, as Arnab has said, I wanted to speak, but I will limit because he has shared. Of course, the construction contribution, which has slightly contracted in FY20 as compared to what it used to contribute to the overall steel consumption because of the reasons we know in the current year. But going forward and the projections we see, our estimates definitely say that definitely the construction will reach back and maybe surpass 60-65% consumption levels from the overall steel demand. In addition to that, I will just like to say that the steel industry, with this very special focus, many of my friends delegates here may be representing the MSME sector. The steel industry as an industry have done a lot of study, and we have come out with certain facts which were there, but yes, now we have identified to act on those, that the contribution and the importance of MSMEs to the country's economic growth. So if we see that MSMEs, which are maybe more than 60 million in numbers, contribute to almost 30% of the country's GDP, and maybe 40 to 45% to the manufacturing. And if we compare to a economy into culture, which culture-wise and the way it operates, similar to India, like one of the BRICS economy like Brazil, the MSME's contribution is 60%. So Government of India has also focused to take this level at a much higher level. And for that, understanding the importance of MSMEs, which basically contribute to employments in a very, very large scale. So we as a steel industry tried to identify the constraints being faced by MSMEs to be more competitive. And few of the reasons which we identified were significantly smaller lots, very, very customized requirements of steel, and then smaller lots not enabling them to import the material whenever required, and getting the availability of the steel and the reach of these MSMEs to the steel producers. These were the constraints which we identified after we conducted this study. So for that, certain actions which we have taken as an industry, especially at JSW, that maybe we are going to ensure the availability of steel to MSMEs, even if it is 2 ton, 4 ton, 5 ton, in their customized requirements through our channel partners. We have made a dedicated cell in the organization for MSMEs, dedicated sales team, and online access also we have worked on for the MSMEs to directly approach us, so that the company as a whole can take care of their requirements. Because we understand that if the economy has to grow and the steel consumption has to grow, and India has to, as a country, to be competitive globally, it is very important, because the present contribution of MSMEs maybe to the exports is maybe about 75 to 76 billion. and the government has made an ambitious target of taking this doubling this number to 150 billion. And I think if we are able to take care of these constraints and the challenges being faced by MSMEs, I think definitely the things are going to move much at a much faster pace than the way it is moving today. So, Monica, apart from this, I don't think that anything very significant to add in terms of pricing. Yes, because the topic says, I will say that in terms of the pricing, we are seeing that the first poll question which you said speaks in totality about this. It is basically which side of the fence someone is sitting, and it is easy to speak. But yes, steel prices in general are driven by 2, 3 factors. It is, of course, the raw material prices contribute to a major, one of the major reason. Apart from that, the demand outlook, and also the internationally how the raw material and the price movements. Just to give you an example of one of the factors which normally doesn't come in front for all of us to realize that what impact it is happening on steel, if, of course, the focus is the shift which has happened in like during pandemic when the industry was working, the demand was very, very low. But to ensure that the requirement, though at a smaller volumes, is catered, the country focused on exports also, just to ensure that the steel mills continue to produce. Otherwise, producing that small quantities in larger capacities is extremely difficult and not possible. So export percentage as a strategy was increased, but the focus was on domestic. When the domestic revival started in June, July, the export volumes have significantly reduced to a very, very insignificant level as compared to what it was witnessed in first 4 or 5 months of the current financial year. But the challenges being faced that India as an economy, we are dependent on a lot of raw material, also imports also. The break bulk vessels come, the container vessels come. With the imports now, China, whatever the globally the outlook towards is that import from China has resulted in a very, very significant challenge in terms of the shipping lines, if we see. Like availability of the containers, availability of timely arrivals of the raw material, all those are very, very significant challenges which adds to the cost also at times. Working in a planned way. So industry is going through challenges, but at the same time ensuring that the availability of steel today is the key. Pricing, I will say, is secondary today because pricing is, as I told, are driven by many factors. But ensuring the availability of steel, because globally it is being felt with China not present in the global market, it is becoming definitely a challenge the way we are seeing that growth in the Chinese market in terms of the consumption China market, and China being absent almost from the international market. The availability of steel to ensure timely supplies is the key on which the industry in India, I think the steel as an industry is making all efforts to ensure that the material is made available at the right time. And we ensure that maybe next year we see a positive year because and this one more last point which I will like to add before we end, that if we see that one positive factor we have to see for maybe next calendar year, that year 1920 we all know for steel industry has been a year of consolidation. Lot of insolvent companies in the steel industry, maybe valuing almost 2 lakh crores, got revived through the IBC process, which was a great initiative by Government of India in a very, very focused way, which is ensuring increased production and increased capacity utilization of these facilities, which will lead to higher availability of steel also. So we see that going forward with the normal, under normal conditions expected now into 21 and increased availability in terms of the production and the demand growing, I think it will be a very wonderful year for the industry as well as the steel, not only steel industry, but even for the end users, MSMEs and all industries, that there will be a right balance of demand and supply is what we feel. Thank you very much. Thanks, Monica.
Thank you so much, Sharad sir, for giving a positive picture for year 2021 for both raw material and steel industry. And we really appreciate efforts taken by JSW to support MSME sector. Before we move on to our next panelist, audience, I'm giving you another question and I request you all to please vote. So the question is on your screen. Will the steel prices peak in Jan to March quarter? 12% says no and 20% says maybe. So we have the answers now. Am I audible and visible to you all?
You're audible now, Monica.
You're audible. I'm audible to you now. Okay, so I'm sharing the results of the poll. 68% audience feel that the steel prices will peak in Jan to March quarter. 12% says no, and 20% says maybe. So our public sees there is a scope of more hike. And now moving on to next speaker, we have Mr. Praveen Shrivastava, Chief of Sales and Marketing Tubes Division, Tata Steel Limited. A little introduction about Mr. Praveen. He has 20 years of work experience with Tata Steel, all in various commercial functions. During this period, he held positions both in marketing, sales function, held businesses in area B2B, B2C, and B2SME segment, and also in international markets. He held the responsible for leading various customer-facing initiatives with large direct customers in automotive and construction industry, as well as in the area of distribution and channel management. Over to you, Mr. Praveen.
Hi, thank you, Monica. I hope I'm audible. So thanks for that introduction. Let me just pick up from your last poll that you said that steel prices will peak in Jan to March quarter. It feels good to hear that, yeah, it will increase, but it doesn't give us excitement as steel companies. Because if you see the history of steel prices, whether you take last 10 years, last 20 years, or even last 50 years, it is sinusoidal. It is, the prices keeps going up. It's a cyclic nature of any commodity that has. Steel has also gone through that cyclic commodity, and if you see especially in last decade and a half, we had peaks in say 2005, then 2008, then 2011, then 17, 18. So it was about time that the next peak will come. So it doesn't surprise us that steel prices are going up. The only difference is if you see decade on decade how the steel prices have moved, it has changed its basis. So if in 1990s, if you see the average price for that decade would be around close to $200, then it moved to $300. Probably in this last decade, it was closer to 400 or even 400 plus. So that is obviously because of the factors of manufacturing that prices go up. And second thing, it has happened between two peaks. Earlier, it used to be a 36 months to 48 months cycle. It will go up, slowly come down, slowly it will go up. I think those frequencies have changed a lot, and the price increase and decrease both happens at quite a frequency at a larger change in the prices. So it was about time that prices will go up. As my previous speakers, panelists have also mentioned, primarily if you see steel prices changes because of, I like to put it in 3 or 4 buckets. One is obviously the cost push, which is a direct correlation. Not only raw material prices, but also there are increase in say logistics prices. Sometimes there are cost factors like power, electricity, etc. also goes up. Some other mineral prices goes up, which goes into manufacturing. The prices of steel goes up. Second is obviously the demand pull. Whenever there is a supply-demand gap, like any commodity, if the demand is more than supply, like also is happening just now. And this works both in domestic as well as in international market. So as Mr. Sharad was mentioning that China is out of the market just now, and China used to be a big exporter in the world, and China is not exporting just now because of their domestic demand has gone up, and that has created a vacuum, so to say, in the marketplace, and the prices have gone up because other suppliers have stepped in globally. I'm talking about to meet that demand. So that's a classic case of how demand also can supply-demand gap can pull up prices. The third is obviously the regulatory thing. When taxes goes up, when government intervenes for say tariff or anti-tariff barriers, then the prices go up. The classical example is US. They have put an anti-dumping duty in half the world, so no one can export to US. And you see the US prices are always 50, 100, 80, $100 above the rest of the world. So the prices in US, the domestic consumers in US pay $100 more than the rest of the world because there is an anti-dumping duty put by the government. And obviously there are some global events still. Today the world has become very close. Steel is a very, very sensitive product all over the world. Anything that happens, whether it is a flood in Australia or a fire somewhere else, or the oil prices goes up, or the oil companies decide to cut down on prices, it has a cascading effect on commodities and still does get impacted by that. So these are some 3 or 4 big factors because of which the steel prices keeps changing. As I always say, though there are many publishers, many people who publish and forecast steel prices, but I think in my personal experience, they have not been, none of us have been correct. So I always say that there are no pundits left in steel companies who can predict what will be the price going forward because of all these factors. There are so many factors working on it. So that it's very difficult to predict what will be the steel prices in going forward. Whether it's next quarter or next year, it's very difficult to predict. So that was on prices. Coming down to my business on tubes and pipes, obviously it's a big segment. If India consumed about more than 100 million tons, I think tubes and pipes production was about 11 to 12 million ton in the last year, and it goes into all the segments that Mr. Arnab mentioned in the beginning. It goes into construction, it goes into automotive, it goes into retail segments, individual house builders, many small and big infrastructure projects. So it gets impacted, and because we are the tubes and pipe industry is a big segment. We are both the recipient of steel price. So if the primary steel makers are increasing the prices, that impacts us. And we also are forced to increase the prices because tubers work on a very narrow margin. The entry barriers are not much. It's largely a fragmented industry in the country. And any increase in raw material prices can play havoc on the EBITDA margins of the tubers. So right, like it's happening just now. If when I say raw material, for us, the raw material is flat product steel. If they are going up, the steel prices goes up. But it's the other way around also, because being a large consumer of steel, many times so happens when the tube demand goes up or the structure hollow section demand goes up. Again, the classical demand supply role comes into play. And when we want more steel and the steel is not available in India, the prices for us will go up. So again, what happens in globally, what happens domestically in steel, same thing happens in tubes also. that prices, we get impacted by prices by the similar factors. Maybe there is a lag of, sometimes there is a lag of a month or so, but currently that lag is also not there because, as I say, the price rise are very steep. And if we don't implement those price increases in our products, it has a huge impact on our profitability. So that was all on prices. Coming to demand, as I also agree, I think the worst is behind us. We are looking at a very good next year, FY22, I mean year 2021. From a tube and pipes perspective, I believe that especially in construction, the growth rate of tubes will be better than that of steel. And this is for a simple reason that tubes was normally a very, very traditional application was conveyance. Tubes was used for supply of water about even up to 15, 20 years back. Which you all know, especially in small dia, it has all been replaced by plastic. In fact, in last 2 decades, from 2000 to 2020, this segment has been taken over by plastic to the extent of almost 90%. That means 90% of this market has been taken over by plastic. But it doesn't mean that tubes have died down. Tubes and pipes industry have found new applications. We have got into structural applications where we are now part of many large infrastructure projects where you earlier used to see only concrete. The best example are the airports. Any airport you go and you see, it's all made of from tubular structures. Steel buildings, which is very novice in India, I'm definitely hopeful because of the advantage that hollow section provides to a steel building. It will not be a surprise that more and more hollow sections will go into steel buildings in coming years, and that's what that makes me confident to say that whatever be the rate of growth for construction industry for steel, tube will be at least 2 or 3 basis points more than that, because we will see more and more conversion of, and it's not a competition with steel, it's a complementary to steel. So more and more usage of hollow sections getting into construction, buildings, large infrastructure projects in coming year, and that journey has already started in a manner of speaking. As I said, airports are a very good example. You will very soon see, I think Indian Railways are doing a wonderful job. They have decided to convert all the large railway station in India like an airport. I mean, in terms of look, feel, facility for the passengers, it will be, and I'm happy to announce that the first pilot which was done, it's done with the entire tubular structure. So we see that obviously it's there, it needs to be implemented, and to that point I agree that government needs to push this such infrastructure projects into the ground. So though we have lost out on conveyance, especially in small dia where plastic has taken over, I think tubular section plays a big role today in structural application, right from whether it's an individual house builder. If you go to tier 2, tier 3 cities and see the houses, the individual who build houses, the gates, the grills, the railings, the shades that they make is all made of hollow sections just now. And on the other extreme, the large infrastructure projects like, as I said, airports, railway station, metros are using more and more of hollow sections. So I have very positive outlook and a step much higher than the outlook that steel has, that we will do better than steel in next year and also in coming years. Thanks, Monica.
Thank you so much, Praveen sir, and thank you for sharing your concern that now we all know that 90% of the pipe market has been taken over by plastic, which is absolutely a serious concern. But I am quite positive that people are realizing the importance of steel and they will soon start to come back. And I hope 2021 proves to be a promising year for all of us. Before we move on to our next panelist, I'd like to raise one more poll. So audience, on your screen, so the question is, iron ore shortage in India is likely to be around 50 million tons in financial year 2021. Will it further impact the steel prices in 2021? Audience, please vote. Iron ore shortage in India is likely to be around 50 million tons in financial year 2021. Will it further impact the steel prices next year? हम ऑलरेडी देख रहे हैं कि काफी शॉर्टेज हो रहा है एंड नेक्स्ट ईयर इट इज लाइकली टू बी 50 मिलियन टन. क्या आपको लगता है कि स्टील प्राइसेस को ये और इम्पैक्ट करेगा? ऑडियंस, प्लीज वोट टू द मैक्सिमम. So the results are quite visible. Okay. So here are the results. 84% people feel yes, 11% feel no, 5% feels maybe. So 84% of our audience feel that this iron ore shortage will further impact the steel prices in 2021. So moving on to our next panelist, we have Mr. Bidyut Chakraborty, Director of Mining and Metals at KPMG. A little introduction about Mr. Bidyut. He's a postgraduate mining engineer by training and a full-time management consultant by practice, has more than 19 years of consulting advisory experience in mining and metals industry segment, out of which more than 13 years are with KPMG. He currently serves as a director in KPMG in India's mining and metal advisory practice. Over to you, Mr. Bidyut. Please unmute your mic.
Monica, thank you so much. Can I have access to show a few slides?
Yeah. So, Bidyut, I'm making you a presenter. You will see a message on your screen. So, just keep your
Sure.
presentation open and now you can share.
Okay. My screen visible to you, Monica?
Absolutely. Your presentation is visible to us.
Okay, okay, thank you. So, thank you everyone. Glad to be part of this important discussion. I think we need to look at steel and the related raw material prices, that how is the trend going to be, especially in the short term, because long term, as my previous speakers spoke, it's everyone's guess. I mean, we do not have much visibility how Australia and Brazil with China, those kind of supply relations will happen, both from geopolitically as well as other logistical challenges that we have been reading about. Same goes within a lot of policy, stroke auctions, stroke other mineral sector reform, etc., that have been proposed by the ministry when we look at the domestic market. So many of the things are may be going through some transformational changes in the long run. If we focus only on the next 1 year, 1.5 years, and very aptly the seminar has been named, it is only the outlook for 2021. From that perspective, I would like to present 5, 6 slides that I have collated in order to share with this larger audience and get your views on. Just a recapitulation of what has already been discussed. If we look at the crude steel production in India, it has been severely impacted due to COVID, okay, especially in Q1 and Q2. But the notable point is that even before COVID, when we closed on FY20, we already saw a little bit of dip, only 2 million ton as against 111 million ton of FY19 when we closed the books for FY20. Of course, that had something to do with the COVID impact already happening in the month of March in this calendar year. If we look at April to October, the first 7 months of this financial year, as against the same period last year, there is around 17% drop in terms of overall crude steel production, which is understandable because of the significant hit the sector had to go through, especially from real estate, auto, and other construction sectors during this period. But there is a slight bit of uptick in Q2, because of which some ground has already been recovered. But still, there has been significant drop of around 11 million ton in the first 7 months. And if you look at any of the rating agencies or the industry analysts, everybody is talking about that it will, this trend will probably continue, and to go back to the level of even say FY20, we'll probably need to wait till the closure of FY22. It may not happen in FY21. Moving forward, if we look at the iron ore production at the same time, okay, iron ore production has also been impacted due to the supply shortage. Okay, that we have observed in the last 6 to 7 months. One of the key factors again is the pandemic, but there has and another key factor is associated that the demand from the steel sector has been very tepid in Q1 definitely, and also from Q2. So this iron ore supply issues can be attributable to a couple of points, specifically from the supply side. If we look at Odisha, which is more than 50% of the supplier of ores to look at, operationalization of the already auctioned mines has not been very successful so far. Everybody kind of envisaged that those mines will probably come into production, especially already the operating ones, not the greenfield projects. These are all operating, so maybe they will come into production within the first 6 months, but not everyone has been able to do that. Many of the players we have been observing in the marketplace that they are reassessing their high bid premiums that they quoted in the auctions. Okay, and that might be one of the key factors for buying out time. Okay, that probably is happening in some of the cases. Production expansion plan and also the readiness to operationalize for those expansion projects or the new mines, especially from two key commercial miners in the PSU space, NMDC and Odisha Mining Corporation. These two are going to be the critical factors to drive production as we move forward. In Odisha, Chhattisgarh, and some parts of Karnataka, because NMDC, I understand, is going to start Donimalai range. The fourth point is also very important, that even if the production can be, kind of upscaled over the next 1.5 to 2 years, come 2023, and if the current needy recommendations stay on the suggested mode of transportation of ore, okay, then for more than 1 million ton capacity EC capacity mines, all miners have to move to a transportation mode of railway or slurry pipeline or conveyor, maybe piped conveyor, to adhere to the needy recommendations of from environmental pollution perspective, and they need to bring down their road transport to a level of around 30%. That's a stricture that is there on the table as of now. Unless there is some further thoughts in this regard, this is going to be one of the critical factor which will drive the dispatch of ore within this iron ore rich states. This can become a kind of a deal breaker, deal maker, unless it is thought through. If we give a closer look to the recent iron ore auctions in Odisha and the outcome that we get to observe so far, there were 16 pure play iron ore mines that were auctioned. The colored ones are the ones which have been won on
I think it's gone mute.
Bidyut sir, we are not able to hear you. Bidyut sir. Bidyut sir, we are not able to hear you. Bidyut sir. Bidyut sir. Is anyone able to hear Bidyut sir?
No, we are not able to hear it.
I think he is also not able to hear us. Bidyut sir. Bidyut sir. We are not able to hear you. Bidyut sir, let me give you a call. I don't know how. mm. Bidyut sir, you're not audible to us. You're not audible to us.
I think there's a problem with his